Hello dear friends. In today's video, I will be discussing a strategy that is ideal for people who want to trade any financial assets on the stock market, both for those who are new to trading and for those who have reached a semi-professional level. In this strategy, there are not many entry and exit points, so it is very easy for people who have busy days and cannot constantly keep an eye on the chart.
To be clear, this strategy is not my own invention.
I saw it from a person who does this job at a professional level during my beginner time. Before setting the indicator settings, I must mention the critical point of this strategy. We will use pin bars as entry and exit points, so it is essential to set alarms and check your chart for the appropriate entry point when you receive notifications from these alarms. That's why I am bringing up the settings of the alarm you need to set first, and then I will bring up the Donchian channel settings one by one that we will use. Please remember, in this strategy, we will add the Donchian channels indicator twice in our chart in the indicators section. Let's set the settings carefully. Now that we have set up our pin bar alarm and indicator settings, I will explain the rules of this trading model to you. Rule 1. For a long position, the 20-period orange Donchian line must be above the 50-period blue Donchian line. Rule 2. The needle of the yellow bullish pin bar should enter between both Donchian lines, but the body should close above the orange Donchian line. This is a very strong bullish signal. The trade is entered when the pin bar closes. Let's look at a few examples while keeping these rules in mind. We entered a trade with the closing of this pin bar. If we see a bearish signal pin bar, we take profit by closing half of the position and pulling the stop loss level to the entry point. In this way, we can continue to target higher profits without risk. The optimal point to close the trade is when a red candle closes below the 20-period orange Donchian line. As you can see, this red candle closed below the orange line. That's why we're closing the trade here. As you can see, we closed the trade with a 1-to-1 risk-reward ratio for profit.
If you didn't clearly understand the long position rule, please watch the video again because I will now show you a few more examples of long trades. If you clearly understand the trading rules, you will understand much better.
Before we move on to other examples, I kindly ask you to subscribe and hit the like button. This way, you can help me reach a wider audience and benefit more people with the strategies I've been working on for a long time. Thank you. Let's move on to other examples. Now, let's look at a few short position examples. Rule 1. The 20-period orange Donchian line must be below the 50-period blue Donchian line for a short position. Rule 2. The bearish pin bar's wick should penetrate both Donchian lines, but the body should close below the orange Donchian line. This is a very strong bearish market signal. Enter the trade upon completion of the pin bar. In this trading example, you can see that the first bull pin bar has a very high profit ratio, so the trader's choice will be to take a 50% profit or close the whole trade with a large profit. As a professional trader, I would close the entire trade when I see a signal of retracement if I catch a ratio higher than 1 to 2. This depends on your risk management preference. Bearish pin bar with the tail inside both lines. The trade should be opened from the closing level of this pin bar. The stop loss level should be above the blue line. And as you can see, the first bull pin bar appeared at a very high point again. You can either take 50% profit, move the stop loss level to the entry point, and continue or close the entire trade with this perfect profit rate. I put this example to draw attention to a subject. Please look carefully. Our indicator has generated a pin bar signal for a candle without a wick. In fact, this candle structure is not a pin bar and the indicator is making a mistake. Therefore, it is important that you carefully check when implementing the trading rules. If we had opened a trade with the pin bar signal in this example, we would have been stopped without profit. This short position example is also quite interesting. The reason I show such interesting examples later in the video is to help you strengthen your trading strategy. Here there are 3 bear pin bars that comply with our rules. You can either enter on a single pin bar or try to increase your profit by adding funds on each pin bar. But remember, the most important thing is not to enter any trades that do not comply 100% with the rules of your strategy. Dear friends, I am trying to publish the simplest, most profitable, and strategies that I have personally tried for an extensive period of time. I also try to explain in the most understandable way in my video content. To be honest, I am not as expert in making video content as I am in stock trading. If there are parts that you don't understand, please write in the comment section. I will try to help you with pleasure. See you again. Stay with love.